Well, joining us now is Krishna Guha, Vice Chairman at Evercore ISI. Krishna, great to have you back on. We had a flurry of Fed speak today. So we had those comments from Kashkari, but you also had Bostic repeating his forecast for only one cut to come later this year. Logan saying no soft landing yet, still uncertain if policy is sufficiently restrictive. And Bowman saying doesn't see rate cuts as warranted this year. What are we to make of this coming into a week where CPI is really going to be the star of the show, with all the other economic data kind of circling it?
So you're 100% right that next week is all about inflation. Now, when it comes to the Fed speakers today, I would aim off a little bit the relatively hawkish selection of speakers we happen to get today. It's not a fully representative sample. But what I took away from your interview with Kashkari and Goolsbee is this very key point. Both the Doves and the Hawks are agreed that rate cuts are on pause and they are in wait and see mode to see what story that inflation data tells over the months ahead. In a few months' time, we'll have a much clearer picture of whether the Q1 inflation was a temporary setback, the economy is not overheating, and inflation is stepping down again, or Q1 inflation was the signal the economy is heating up too much, and we have a more persistent inflation problem. Either way, the Fed should know what to do.
And of course, we're having this conversation as we do see the Fed begin to slow down quantitative tightening. So less restrictive, arguably, on that side of the table as well. But I guess all of this raises the key question, especially when you talk about inflation data, which is lagging by its very nature. How much of this is a credibility situation for the Fed? How much of this is truly a data dependency situation for the Fed?
Well, look, I certainly think that they worry about moving ahead with cuts. They've long worried about moving ahead with cuts and then finding out that they had a more persistent inflation problem than they thought. That's been the whole basis for this this line they've been taking for a long while now. They won't move until they're sufficiently confident in the inflation outlook. But you're onto something important there, which is policy really should be forward-looking. So data-dependent, yes, but not in the pass-fail data point-dependent sense. Data-dependent in terms of informing, updating our understanding of where inflation is going to go over the next year or two. I do worry that we're not necessarily as forward-looking as we should be. And I hope that the Fed will really focus on that forward-looking outlook going forward.
How much does fiscal policy factor into what we're seeing in the economy right now? And I ask that because you've had certain major spending policies years in the making for which the money is now finally going out to the door and actually being manifested in projects, whether it's infrastructure, whether it's chips, whether it's some of the other stuff that we've seen. And then on top of it, now you have President Biden poised to put more tariffs onto more goods being imported from China as soon as next Tuesday.
So unquestionably, in my mind, easy fiscal policy, serial fiscal programs hitting the economy one after the other are a very important part of the reason why the economy has not slowed more than it has, with interest rates at 5.25% to 5.5%. If you're looking for stories as to why the so-called neutral rate might be elevated, at least in the short run, fiscal policy has got to be part of that story. Is it the whole story? No. But for sure, it's part of the reason why the economy hasn't slowed more with Fed rates where they are. Part of the reason why, in the short run at least, that neutral setting looks quite high. Part of the reason why you have some Fed officials, not most, but some, worrying whether they are sufficiently restrictive.